Welcome to the deep dive. We cut through the noise, find that signal, and really give you the insights you need to get up to speed fast.
Today, we're zeroing in on one big idea,
Yeah.
seen through the lens of Warren Buffett's incredible career. Patience. Just pure, simple patience.
Yeah, and its profound impact. We've pulled together quite a bit here: biography, his letters, analyses of, his leadership, even his habits.
And it all seems to point back to how his financial smarts, his decision-making, his, continuous learning, they're all tangled up with this idea of patience. It's often overlooked, I think.
Definitely. So our mission today isn't just to say Buffett was patient. Duh. We want to really understand how that patience became such a foundational habit, how it fueled that legendary success.
Right. So we'll break it down. We're looking at, 7 key phases of his journey.
Exactly. We'll pinpoint the signs of patience in each phase, look at the benefits, how he actually applied it, what the competition was doing.
And crucially, what lessons are there for, anyone in business today? Entrepreneurs, leaders, investors.
Okay, let's dive in. Section 1, the early seeds. Childhood, early investing, that sort of thing.
Yeah, the very beginning. Even back then, as a kid, you can see these little hints of a willingness to wait to play the long game.
Like those early businesses, selling dumb magazines.
Exactly. Those weren't overnight things. They took sustained effort, right? But there was one particular early stock experience that seems to have really solidified the importance of patience for him.
Ah, right. That first stock he bought, City Service Preferred, he held it even when the price dipped. That shows some early grit.
It does. But the real kicker seems to be when he sold it maybe a bit too early.
And then watched it climb higher. Ouch! Missing out on that potential gain. That's a lesson that sticks, I bet.
It had to. And what's really interesting here isn't just that he was patient sometimes, but what he learned from it.
Okay, like what?
Well, he saw the direct link between putting in time and seeing growth, even in his small ventures. He felt the sting of acting too soon, that regret.
So it wasn't just waiting, it was observing, analyzing.
Precisely. Starting to build that habit of looking carefully before jumping in. Pretty fundamental skills when you think about it.
Absolutely. And he put it into practice, didn't he? Buying stocks for the long haul, even if they stumbled out of the gate.
And reinvesting earnings. Like the pinball machines, right?
Yeah.
Taking that money and putting it back to work, expanding.
That first stock dip probably helped too, building a little tolerance for market swings early on.
Good point. Now, think about the context back then. Were young investors typically patient or entrepreneurs starting out?
Probably not, right? The temptation is always for the quick win, the fast buck.
Exactly. The market dangles those quick profits. It's easy to want to sell early, take the money and run. Buffett's early bumps seem to have maybe vaccinated him against that common impatience.
So for someone listening, maybe building their own thing right now, what's the real takeaway beyond just be patient?
Well, it's realizing that real success, lasting success, often comes from just steady, consistent effort, even on stuff that doesn't seem glamorous.
Like selling gum door to door.
Right. It wasn't about hitting a jackpot. It was about stacking small wins, learning about delayed gratification, and learning from those early impatient mistakes that helps you calibrate, resist chasing every shiny object.
So initial setbacks aren't the end game. Perseverance pays off.
That seems to be the early lesson, yeah. Stick with it.
Okay, let's move on. The Buffett partnership era. This feels like where that patient, long-term philosophy really got forged.
Oh, definitely. This is where he really anchors everything to intrinsic value, the real worth of a business, not just what the stock ticker says today.
And he stuck to it, discipline, even when the market was going crazy in another direction.
That's the key. And the research he did, it wasn't just finding good companies. It was about building this unshakable conviction so he could hold patiently.
And the results during those partnership years, pretty significant, I imagine.
Huge. He basically tuned out the short-term market noise, built a strategy that could handle the ups and downs, and really laid the groundwork for, everything came later. Serious wealth creation started there.
So his patience wasn't passive. It was an active strategy.
Absolutely. He wasn't just sitting around. He was digging into businesses, understanding their fundamentals, then committing for the long haul, resisting the urge to follow fads, resisting speculation.
When he bought something, he was thinking years, decades ahead.
That was the mindset. Now contrast that with the typical scene back then.
Okay, so who are the impatient ones?
You had your day traders, your short-term speculators, always looking for a quick profit. Lots of buying and selling.
And that herd mentality, everyone jumping on the same bandwagon.
Big time. Pressure to do what was popular, whether it made sense or not. And periods of, irrational exuberance where prices got totally disconnected from reality. Buffett's patience was a stark contrast.
So, for an entrepreneur today, dealing with trends coming and going so fast, what's the lesson from the partnership era?
Build a solid strategy based on real value. Understand your core business deeply and stick to it. Don't get distracted by every new fad.
Develop that conviction like Buffett did, so you can hold steady when things get choppy.
Exactly. That conviction becomes your anchor.
All right, section 3. This is a big one. The Berkshire Hathaway transformation, late 60s onwards. Turning a failing textile mill into, well, Berkshire. That required a different kind of patience.
Oh, absolutely. Strategic patience, maybe? You see it in how he gradually moved capital away from the dying textile business.
You didn't just chop it off immediately.
No, he stayed involved for quite a while, actually, while simultaneously building up other things, making acquisitions. It was a slow, deliberate shift.
And eventually making those tough calls, like closing the mills when they just weren't viable long term.
Right. That takes patience, too, recognizing when to finally let go for the sake of the larger enterprise.
The benefits of that gradual approach must have been huge, redirecting resources to better opportunities.
Yeah, giving himself time to build a whole new foundation for the company. It showed incredible resilience, adapting to massive industry shifts.
How did he apply it? Using the cash flow from the old business to fund the new.
Pretty much. Patiently managing the decline of textiles while investing heavily in insurance and other areas. It was a masterclass in long-term strategic redirection, reshaping the whole company.
What was the alternative? What pressures was he likely facing?
Well, the typical pressure is always quarterly results, right? Wall Street wanting quick fixes. Many would have pushed to just dump the textile assets fast.
Get it off the books.
Exactly. Managing a declining industry is tough. There's pressure to just cut your losses quickly, maybe without a clear plan for what's next. Buffett's approach was far more deliberate.
So for entrepreneurs facing a pivot, maybe needing to shift their whole business model, what's the lesson here?
Transformation takes time. Be patient with it. Be strategic about how you use your existing resources to fuel the future.
And don't be afraid to address the parts that aren't working, even if it's a slow process.
Right. Sometimes a patient managed wind down is the smartest long-term move.
Okay, section 4, patient capital allocation. This is classic Buffett, isn't it? Building the conglomerate, making those big investments.
Absolutely. This is where his willingness to wait for the right opportunity at the right price really shines.
Waiting years sometimes for an acquisition or for a stock price to hit his target.
Years, even decades sometimes. And look at the holding periods for things like Coca-Cola, American Express. We're talking multi-decade commitments.
And holding on to cash, that's patience too, right? Not feeling forced to invest just because the money's there.
A huge part of it. Sitting on large cash reserves when nothing looks attractive, that takes incredible discipline and patience.
The benefits seem obvious. Buying great businesses cheap.
Letting that compounding magic really work over long stretches of time.
And being ready to pounce when things go on sale, like during market crashing.
Exactly. His method is clear. Buy good businesses, you understand? Buy them with the intention of holding, well, basically forever.
And resist that urge to just do something with the capital. Wait for the fat pitch.
That's the mantra. Now, who's doing the opposite in the M&A world or investment scene?
You see companies overpaying, right? Maybe because they feel pressured to grow, or they get into bidding wars. Impatience drives up the price.
Definitely. And investors constantly churning their portfolios, trying to time the market peaks and troughs.
Which Buffett famously advises against. And you see it during market bubbles, people chasing inflated assets.
Right. Patience protects you from that kind of frenzy.
So for entrepreneurs thinking about investments or acquisitions,
be incredibly patient. Wait for the right strategic fit and the right price. Don't rush it. Build your own business like you plan to own it forever.
And keep that financial discipline. Have reserves ready for when those real opportunities finally show up.
Preparedness meets patience. Powerful combo.
Let's talk about section 5, weathering market storms. His calmness during crises is almost legendary.
It really is. That patience becomes emotional resilience in turbulent times. He stays rational when everyone else is panicking.
No impulsive selling driven by fear.
Exactly. He avoids locking in losses that way. And he often looks at these downturns, these panics, as potential buying opportunities. But even then, he's patient. He assesses. He waits for the dust to settle a bit.
Doesn't just dive in recklessly.
No. He waits for clarity, or at least for prices that reflect the fear, not the fundamentals.
The benefits. Avoiding emotional mistakes, obviously. Staying focused on the long term.
Right. Not getting whipsawed by headlines. And potentially picking up great assets at bargain prices when fear is rampant.
So the application here is really about emotional control. Sticking to your strategy when it's tested.
Yeah, having the fortitude to wait it out during uncertain times, rather than feeling you have to act immediately.
Who represents the opposite during market stress?
Well, you see fear and greed driving decisions everywhere. People selling at the bottom, buying at the top.
The 204/7 news cycle doesn't help, does it? Amplifying the panic.
Definitely not.
Yep.
It fuels volatility, encourages rash decisions, and financial crises themselves just create this immense pressure to abandon long-term plans.
So for entrepreneurs dealing with their own business crises or economic headwinds,
Cultivate that emotional control. Don't make hasty decisions under pressure. Keep your eye on the long-term health of your business, not just the current storm.
and remember that volatility is normal. Patience helps you ride it out.
It's a crucial survival tool, really.
Okay, let's shift gears slightly. Section 6. Patience in relationships and leadership. This isn't just about stocks.
That's a really important point. His patience extends to how he builds partnerships, how he leads Berkshire.
You see it in those long-standing relationships he has, right? Built over decades.
Absolutely. That consistency builds trust. And think about his leadership style, famously decentralized. He gives his managers huge autonomy.
Which requires trusting them. And patience, right? Not constantly meddling.
Exactly. It requires a willingness to let people do their jobs, make their own decisions, even make mistakes without hovering over them. That's a form of patience.
The benefits seem pretty clear. A culture of trust, loyalty,
Relationships that can withstand bumps in the road.
and empowered managers who are probably more innovative and motivated.
Right. His application is about clear, consistent communication, dealing with problems calmly, and investing in people over the long term, giving them room to grow.
What's the contrasting style you often see?
Micromanagement, lack of trust, leaders who need to control everything.
Or business environments that are purely transactional, short-term gains over building real relationships.
Yeah. And when challenges hit, impatience or lack of trust can really fracture relationships quickly.
So for entrepreneurs, building teams, forging partnerships,
Invest the time patiently to build strong, trust-based relationships. Consistency is key.
and empower your people. Give them the trust and the time to succeed. It pays off.
Patience in people management is just as crucial as patience in capital allocation.
Which brings us to the final section, Section 7, the power of compounding and legacy. This feels like the ultimate payoff of all that patience.
It really is. His success is fundamentally tied to letting compounding work its magic over decades. He says it himself all the time. Compounding is the key.
Allowing those investments to grow exponentially. Focusing on results over 5, 10, 50 years, not just the next quarter.
Exactly. That long horizon is what unleashes the power of compounding.
And the benefits, well, they're astronomical. Wealth creation on a scale that's impossible with short-term strategies.
And a legacy that powerfully demonstrates the value of that long-term perspective.
How does he apply it? Reinvesting earnings, obviously.
Consistently, prioritizing time in the market over trying to time the market, just staying invested.
And constantly teaching this principle, right?
Yeah.
Passing on the importance of patience.
Yeah, he's very vocal about it. Now, what forces are working against this today?
Oh, everywhere you look, right? Instant gratification culture, get-rich-quick schemes.
Constant pressure on companies for quarterly earnings beats.
Often sacrificing long-term investment for short-term results. And all the high-frequency trading, short-term speculation.
All counter to the patient, compounding approach.
So the ultimate lesson for entrepreneurs here, connecting patience, compounding, and legacy.
Understand that compounding applies to everything. Finances, yes, but also skills, relationships, brand reputation. It all builds over time with consistent, patient effort.
Focus on sustainable, long-term growth, not just quick wins. The biggest rewards come from that compounding effect.
And cultivate that patient mindset in yourself and your whole organization. It's fundamental to building something truly lasting.
So wrapping this up, Warren Buffett's story really hammers home that patience isn't just, waiting around. It's an active strategic discipline.
Yeah, it's a discipline in investing, In leadership and building relationships, it's what allows opportunities to ripen, helps you withstand the storms.
And ultimately, it's what unlocks that incredible power of compounding over time.
Which leaves us with a really interesting thought, maybe something for you, the listener, to chew on.
Mhm.
How does Buffett's famous self-discipline, his ability to stick to his rules, avoid impulse, how does that actually enable his patience?
Especially when the market's going wild or some hot new trend pops up.
Exactly. Thinking about how discipline and patience work together, that might give even deeper clues to why he's been so successful for so long.
Welcome to the deep dive. We cut through the noise, find that signal, and really give you the insights you need to get up to speed fast.
Today, we're zeroing in on one big idea,
Yeah.
seen through the lens of Warren Buffett's incredible career. Patience. Just pure, simple patience.
Yeah, and its profound impact. We've pulled together quite a bit here: biography, his letters, analyses of, his leadership, even his habits.
And it all seems to point back to how his financial smarts, his decision-making, his, continuous learning, they're all tangled up with this idea of patience. It's often overlooked, I think.
Definitely. So our mission today isn't just to say Buffett was patient. Duh. We want to really understand how that patience became such a foundational habit, how it fueled that legendary success.
Right. So we'll break it down. We're looking at, 7 key phases of his journey.
Exactly. We'll pinpoint the signs of patience in each phase, look at the benefits, how he actually applied it, what the competition was doing.
And crucially, what lessons are there for, anyone in business today? Entrepreneurs, leaders, investors.
Okay, let's dive in. Section 1, the early seeds. Childhood, early investing, that sort of thing.
Yeah, the very beginning. Even back then, as a kid, you can see these little hints of a willingness to wait to play the long game.
Like those early businesses, selling dumb magazines.
Exactly. Those weren't overnight things. They took sustained effort, right? But there was one particular early stock experience that seems to have really solidified the importance of patience for him.
Ah, right. That first stock he bought, City Service Preferred, he held it even when the price dipped. That shows some early grit.
It does. But the real kicker seems to be when he sold it maybe a bit too early.
And then watched it climb higher. Ouch! Missing out on that potential gain. That's a lesson that sticks, I bet.
It had to. And what's really interesting here isn't just that he was patient sometimes, but what he learned from it.
Okay, like what?
Well, he saw the direct link between putting in time and seeing growth, even in his small ventures. He felt the sting of acting too soon, that regret.
So it wasn't just waiting, it was observing, analyzing.
Precisely. Starting to build that habit of looking carefully before jumping in. Pretty fundamental